A swing trade idea? Is there something that people can do for a swing trade and try and find the best swing trades? And obviously when we hit COVID, it became the best trade in the world, bar none. All you had to do was buy the green or sell the red, and you made yourself literally millions of dollars during that period. So Kim was asking about it and says, well, how is this so easy? And I says, look, it's just the RGLs. That's all it is. It's just the RGLs. And Kim quickly decided that it was one of her favorite trades that I've brought into the classroom. And then the concept was, well, sometimes RGLs are brilliant, just like every other trade. Sometimes RGLs are brilliant, and sometimes RGLs are not so brilliant. So one of the things that we understand is we've got to be flexible enough to recognize when the RGL is likely to be brilliant. Well, when you see a little comment that I made yesterday, when for the first time in a long time I bring across this, this mention here of a very bullish SPY skew. The fact that we're actually mentioning this means that we have a macro interest in the RGL here, right? So when we say that there's a very interesting bullish skew on the SPY, well, that's going to be an idea about an RGL trade, because if you've got a bullish skew, it's a volatility expansion trade, right? That's what bullish skew is, a volatility expansion trade to the upside on the equity markets. So what happened? Well, what do you think happened, guys? Madness took place, right? Madness descended from that bullish skew that we knew about last night. So when we talk about what madness descended, well, take a look, guys. I mean, we can't make it up. It is just on the chart for you. I mean, we don't have to travel very far to figure this one out, right? So we're talking about a very bullish skew on equities. So obviously this means that at 9 o'clock London time yesterday, 9 o'clock London time yesterday, what you're going to do is you're going to draw in the price level. Right, so at 9 o'clock London yesterday, you're going to draw in the price level, right? So you're just going to make sure you understand there's 9 o'clock there. And what you're going to draw in is you're going to draw in that price point right there. So there's 9 o'clock right there. So obviously you're reading this as it comes into 9 o'clock. You're not reading it after 9 o'clock. You're reading it when it comes into 9 o'clock. So obviously that's at 20,200. So obviously what we've now got is we've now got what we call an RGL. It's going to be a buy above this price and a sell below this price. Now, because I think it's going to be because I've told you it's a bullish skew, then I expect this to be a buy above this price. So immediately I want to be long the market, right? That's it. That's my trade. There's nothing else to it. I want to be long above the market, and I want to put my hard stop just below maybe the candle or something in there. If you're doing it for a retail point of view, there's your hard stop there. So you bought the NASDAQ at 20,200. At the present moment, it's tapping 20,500, guys. That one trade, that's one single observation about a very bullish skew on equities just paid out $6,000 a contract for you in the overnight session. All you had to do was put in a buy trade at the close when it broke above this level, put your stops to break even when you're comfortable, before you go to your bed, before you finish up for the day, and then when you're waking up the next morning, you're sitting on a 5 lot on $30,000. It's not a bad way to make a living. Now, I don't mention these a lot because sometimes it's give or take a few bucks here or there. Sometimes it's give or take a few bucks and we're not madly keen on it. And then other days, we've got this massive skew. So when I've got a massive skew in these trades, I know somebody somewhere has a very, very strong feeling about this. And the person that's got a very, very strong feeling about it is one of the most important people in the world. No, it's not Kim. Although she's very important. It's the dealers. It's the actual equity dealers themselves. Somebody's bought an awful lot of equities yesterday. Somebody bought a lot of equities yesterday. You can see they're buying. You can see quite clearly they're buying. Remember we talk about the jagged edge? Anybody remember that conversation? The more jagged the edge is, the more accumulation there is, right? So you can see that there's all these jaggedy edges and all this flat top edges. Here, see that flat top there? You see that flat top there? Remember we talked about this. We tweeted it out. We did a classroom on it. No, all right. So I did talk about it, but when we talk about these jagged edges, we talk about the idea that they're making it very, very, very difficult for buyers to hold the trade, right? Very difficult for buyers to hold the trade. Very easy for sellers to hold the trade. So obviously this is just visually looking at it. This is a trade that looks as if it's almost a perfect buy opportunity. And that comes from the cash open over here. Look, I mean, all we had to do was draw a line against the cash open, which in its own right is an RGL as well, isn't it? So there's your RGL cash open price. There's your flat top edge there. There's your flat top edge there. And obviously all you're going to now do is target into those with your RGL close here with this massively bullish skew from yesterday. And what you've made is a $30,000 profit on 5 contracts by going to bed and waking up the next morning. You know, for some of us, that's a reason to waking up the next morning, isn't it? Some of us might be needing a bit more motivation to bother waking up at all. Well, $30,000 is one good reason, isn't it? What a great reason to waking up, guys. So, brilliant trade. Loved it. It was in your tweets last night. You got a good idea about why we do these as ideas, why we put these information points out. It's so that you can start recognizing, well, if it's a bullish skew, I think what we're talking about here is we're talking about big volatility. I'm thinking we're talking about RGLs. I know what side the RGL is. It's a buy side RGL. Let's get the deal done. And it's as simple as that. Anyhow, welcome in, guys. Welcome in. I hope you're all good, ready to rock and roll. Well done, the oil longs. I liked your trade. I liked your trade a lot, and we've obviously killed it there from 67.50s to 68 evens, nearly 68 evens. So that was a great trade. Problems on oil? Sure, because you can see here there's a lot of buyers. Market makers have decided to sell it at 67.90s. And of course, if you're long, you're using that as your distribution to get away from that long position. Okay, here's the data, guys. Let's see what the data's got for us. Okay, durable goods headline, 0. Big fat 0 on the headline on that durable goods numbers, guys. Jobless claims 1.83, pretty much in line with market expectations, 1.834 versus 1.838. Initial jobless claims at 218 against 225, slightly better than the 225 expected. The core PCE price index at 2.8, in line with market expectations at 2.8%. Durable goods ex transport 0.5, 0.1 forecast, so slightly better. Durable goods slightly better. They were expecting it to be dropping by 2.6%, came in at 0%. So, you know, relatively good numbers there. So that's obviously causing equities to be a little bit softer at the top edge here. A little bit softer off the 25 handle. But they're not bad numbers. So if anybody was worried about the economy slowing down, these numbers will help out a little bit. Obviously, the good numbers in terms of the jobless claims, kind of taking away the Fed's argument that they're worried about employment at this stage and helping to build that case that perhaps, again, there's maybe a bit of a change there to their storyline. Now, you know I like the sell side on bonds recently, and of course that sell side bonds is what we did yesterday, and obviously we got a little bit of an opportunity to stay short bonds earlier on today, and obviously that data's helped us with a very, very nice big sell side profit. Thank you very much from those numbers. So you know that storyline that I've been reading to you guys recently has been my big storyline for treasuries, and that has been let's be short selling bonds. And my goodness, that short selling bonds has been an absolute legendary trade now when you look at it. This was the Fed talk, the chat we had about the Fed here, and what's happened. Have I been proven right? Well, I don't like saying I told you so, because at the end of the day it's still just a trade, but I told you so, right? So there's the trade there that we've talked about at length. We've discussed many, many times over. And you can obviously see that the longer term bond trade since that conversation has collapsed in value from 137s to 133s for $4,000 a contract. So like it, lump it, at the end of the day, we've nailed it. That's all that's important to me. We've absolutely nailed it. And that storyline today helps to go towards that bit more of a nailing, if you like. And fabulous macro trade, isn't it? Absolutely fabulous market trade there on treasuries from that bigger macro storyline that we talked about, earlier. Absolutely superb. So again, well done anybody that was on it. Well done anybody that's been playing along on the short sell on bonds with me for that macro sell. We were right. We've proven ourselves to be true. We've proven ourselves about knowing what we're talking about here. And hopefully that gives people a bit more confidence when they're looking at trades like that. We have a very good handle on how this thing's going to play out. And again, we've been absolutely spot on with that one. Going to grab some lunch and then we'll get started for the afternoon session, guys. Welcome in.